Okay. I just got cultured.
Yeah, that was extremely cheesy, I know. But hey, listen, if you live on a rock, and this is the first time hearing this, yes, Meta had earnings yesterday, and Meta is up above 20% right now. Let me double check to see if that's still the case.
One eternity later.
Yeah, in fact, it's 23.64% up. They're killing it. Of course, now you're going to see a bunch of analysts on Yahoo Finance, CNBC, all over YouTube saying, well, I told you Meta was such a great stock. It was a great buy at $88 and it was a great buy at $150. You should have bought. Yeah, but that's not really how it really played out. In reality, in real time, 2 months ago, when Meta had earnings and literally it plummeted even further. Because look, I'm a bag holder. Let's just be real. And I was stressing a lot. In fact, I was stressing as much as Jim Cramer. If you guys don't remember, I did a reaction video of Jim Cramer literally crying and apologizing to his audience for telling people to buy Meta at 300, which is exactly where I bought at.
I made a mistake, and I was wrong. I trusted this management team, and that was ill-advised, and I own that.
Apparently, Jim Cramer told people to sell at $100, but now look at where it's at. I mean, it's ridiculous. It was so low, it really made no sense for people to not buy at that point. But I'm not gonna sit here in front and tell you that I was all positive. Oh, hell no. I mean, did I believe in Meta long term? Absolutely. That's the reason why I held the stock. But if you guys recall, if you watch Money Market Truth, the podcast I do with my friend, I was actually having a freaking meltdown myself, and the other person, one of my buddies named Mark Moreau, had to come on and talk me off the ledge.
Next quarter, what's your time horizon goal for the company?
I mean, again, it's like 5 to 10 years, of course. So, but I also know this. So we're gonna be good 5 to 10 years. But this is the thing. In the meantime, right? For my issue is the dollar cost averaging. That's really what it is, right?
Depression? Isn't that just a fancy word for feeling bummed out?
Dwight, you ignorant slut!
Because there were some key factors that I was that I should have stressed about. For example, do I believe in the metaverse? Yes. Do I think that Meta was undervalued at that price? Yes. Do I think it's going to go up in the future? Yes. Now, did I think it was going to go up as quickly as it did? No. In fact, if you look, Netflix, Meta, and Tesla were the worst performing stocks last year. And if you bought at the massive sellout, the massive discount that it had over 70 to 80%, you are up almost 100% on all three of those stocks, which is insane. I am still a Tesla bear. I still have my short position in place for that one. Netflix, I just don't understand it, and I always thought it was overvalued. Even when it dropped down to 160, I thought it was overvalued. I don't really understand why it's at $300 and why it has the market cap that it has. But Meta was very different. So Meta, I mean, at 300, I thought it was discounted. At 275, I thought it was discounted. I even thought it was discounted at 200. I just didn't want to continue to buy the falling knife because it was bad, y'all. So let's not act like everyone knew that this was gonna skyrocket and go to the moon once it dropped to $100.
You ain't been doing the education, bro. You ain't been doing the education.
A lot of people were freaking out, and I was freaking out. But the difference is I didn't sell my shares. You see, at that time when Meta was dropping quarter after quarter last year, Meta was my biggest holding and still is my biggest holding. My second biggest holding at that time was Square and then Roblox. I did sell out of Square and I did sell out of Roblox because I don't fundamentally believe they have a future or they can justify the price range that they were at the time, because their market cap, looking back, was definitely overvalued. And I just didn't see any special edge or any thesis that told me, hey, Square is gonna go back to 190 or that Roblox is gonna go back to 100 right now. And especially the environment we were in, I just wasn't a believer in that. But Meta, I still believed in, hence the reason why I was a bag holder. I was down as much as 60% at one point. Today, I'm only down about 20-some%, which is amazing. I'm literally $100 off per share of where I initially bought at. Now, hindsight, of course, I could sit there and say, oh man, I wish I had bought at $88. Yes, I know, I'm sure a lot of people, hindsight 2020. The fact is this was somewhat of a lesson learned. If you believe in a company, no matter what, if you were willing to pay for it at this price range, you should have bought it at a lower price range. And I usually give a lot of Tesla bulls crap for doing this because they were buying at 300, they thought it was undervalued, and they were buying at 200 and 150, and I kept telling them, you guys are crazy. But now I kind of see where if you believe in a company, again, I don't believe in Tesla, that's why I'm still very, very, very bearish on it and with this evaluation. Okay, let's just be very clear. It's a great company. I just don't like the evaluation right now. But if you were a hardcore believer, you were buying and you were buying at $100, at the 101. I'm sure you probably loaded a boat at 101, and you are probably sitting kind of fat right now, unless majority of your money was allocated to Tesla at the 300s. But you get my point. Same thing with Netflix. Once it dropped down from literally almost $700 to 160, and if you bought 160, you are doing perfectly fine. Same thing for all the Meta folks who just got into the position. Unfortunately, I didn't. I got in at a little bit higher price, but do I believe in the company long term? I absolutely do. And this is kind of a lesson that I learned this time around. It hurt. It really did. I mean, being down 60% and still holding that bag and debating whether or not you should dollar cost average, because let's just be real. A lot of people are dollar cost averaging on a lot of shit stocks, and it's still looking pretty ugly for them. So I just didn't want to fall on another knife with this situation. That's the reason why I didn't invest. But I can tell you this, now seeing that this earnings wasn't as bad, I mean, they did miss on their EPS, but they beat on the revenue. However, I will wait for this slight pullbacks because now it's in a uptrend. It's now bullish. So when there is a pullback, I will start dollar cost averaging again. I'd rather miss out on the $88 and get the uptrend versus buying in at $88 and seeing it going to $20. That was always my biggest argument with a lot of these companies. So yeah, that's pretty much it. All I gotta say is this, y'all. Congratulations to everyone who held on to Meta. I'm actually happy that I held on to it. I am really, really happy at the fact that there's a good chance that this year I may actually break even with this company. With that being said, like I always said, picking stocks is really a form of art. It's hard. It requires a lot of studying. You can be wrong. It's very subjective a lot of times. So me personally, if you are new to investing, and I always tell people that, just stick to the S&P 500. And if you want a little bit of volatility, go ahead and invest into QQQ as well. Have both of those indexes. Yes, you may not have any massive growth, but you will also minimize the downside to some of these individual stocks that you may buy and you just get in at the wrong price, or the company just completely fails and then it has an epic drop. But that's part of the game if you want to get into these individual stock investing. And even then, let's say you are interested in individual stock investing, I still personally would recommend that you probably stick to dividend stocks, which at times when they get beaten up is a pretty good value buy, and then also you get, of course, the dividends. But I'm not a financial advisor, but I can tell you this. I do have a portfolio with individual stocks. I put it up right here. This is what's currently going on in my portfolio, and that's my play money. In fact, I've only invested $10,000 into that account and that account only, with the rule of only investing $3,000 each year into that account. That's considered my play money account. That's the one where I buy individual stocks, where I sometimes do cover calls, where sometimes I do vertical spreads, where I sometimes just do swing trades or buy stocks, hold them until I feel like they're getting to that overvalued low point, and then I start selling off or shaving off. That is literally my play account. But then I have two Roths and a 401k where I have most of my money deployed into the S&P 500 and QQQ. And then of course, I just recently started about 3 months ago, a dividend portfolio with Fidelity, because I could buy based off of cash versus shares. So every week I would just buy a couple shares into companies that I like for dividend purposes that I feel are discounted. By all means, do it, but grab some good companies. Especially when you're brand new and you don't know how to read a balance sheet, you don't know how to understand the earnings, or you're unsure. Don't listen to too many people on YouTube, because a lot of people will pitch those more volatile stocks. I'm talking about the SoFis, the Palantirs, the Teslas, the Lemonade, C3AI, all of those. You got to be careful with those. Just have great growth opportunities, especially since where they were to where they are now. I mean, literally a lot of them are down like 90%. So yeah, in a bull market, you have some pretty good growth opportunities there, but they're also the very first ones to completely get chopped. So find companies that you're actually interested in and just slowly scale in. Take your time, learn the process. And if you really want to join a really good stock club, I always recommend Capital Mindset. Literally, that is a club that I think is worth $4 a month. That's all they charge, and you actually get to learn things, and you actually get to be around people who are analysts for a living. You get what I'm saying? I actually get educated by people who do this for a living versus random YouTubers, retail investors. So until next time, y'all, I'm Uncultured Currency. See you guys later. Peace out.
Okay. I just got cultured.